We're going to get into CEIN, Q3 ER equity. We're going to do the valuation on Camber Energy Inc. Contrary to belief, with the last earnings report I went over for another company I'm in, CEIN, though they did not have an inspiring earnings report either, I would give them a flat out C. That doesn't mean there was not some good nuggets in there. All right. They've been overall trending upwards, and it's still tangible to see, even if it was not that inspiring of a quarter. So when you take a look, the total assets we have on hand right now is 15 million, or current assets. Now the total assets we have on hand is 47 million as of September. The liabilities is 78 million. And you might look at that like, well, we had positive equity before. Well, what happened is we lost our goodwill of 34 million because we dropped off Amex. We dropped off American Exchange. So when we got delisted to OTC, we lost that goodwill of 34 million. And you can see right here, it's not showing up anymore. So that hurt us a lot, being delisted. So it's not good to see having negative equity again. But it's survivable on the OTC. I'm not too worried about it because nothing fundamentally cash flows changed. All goodwill is almost nearly an imaginary number. It's more about branding than anything. And if you get delisted after being, reverse splitting and having it almost delist before, obviously you don't really deserve that goodwill. So that makes sense. But fundamentally, operationally as a company, nothing has changed. And then as of 2024 September, we issued about 120 million shares this year. And we'll get into that a little bit when we get into the risk. So let's look at the revenue. This is what people were kind of upset about with the revenue because it dropped a little bit, right? It dropped a little bit, but I must say we're still on board we already are beating what we did in 2023, regardless. So we didn't have an increase in revenue this quarter, but we still are already on pace to beat out 2023 with revenue. So in so this quarter for 2024, we only had 3.9 million in revenue, a light quarter for power generation. In total, we had 7.1 million for the quarter. In the quarter in 2023, we had 10 million. And so for the 9 months ended, we're at 25 million. And so if we do another 7 this next quarter, we're looking at 32 to 33 million. So that's kind of where we're looking at right now. If anything changes, we just had that Ozone event, and hopefully we get some contracts there. And we had some big wigs there. We had Veolia there, the environmental waste management, environmental conservation company worth 22 billion, I might add. So hopefully we get some sales popping from there. So we're still in line to beat what we did in 2023. So I'm okay with that. Yes, we did take a fall though on revenue this quarter. So if anything, I would give it a C grade, but nothing really horrific to say I'm not really scared. So that was the revenue. And so these are the growth opportunities. And this is kind of with the future cash flows as well, because I'm putting all this together so we can get a valuation, what we're going to talk about. And so when we look at the broken grid detection tech, we're looking at least 500 million in revenue estimates. And that's by year 5. So I'm basing everything off what we'll be looking at by 2030. Okay. And so We already closed the deal on the first two triggers for the grid tech, right? And so for the next 2 years, because we finally got the patents, right? So 2025, 2026, 2027, 2028, 2029. So at the start of 2030, well, at 2029, we'll have that 500 million. So at 2030, we should already be sort of maturing into 500 million revenue plus. So that's what I'm basing it off of. We should be starting on our trajectory to hit these triggers in 2025 for the first one, for the broken grid tech. So I'm taking that 500 million into consideration. The 5 million was due on closing was payable solely to stock and Viking. All other payments, if subject to sales targets are met, are payable in cash or in shares of convertible preferred stock of the company at the seller's option. Hopefully, you just give them cash. Hopefully, but I'd have been accounting for our float might get up to 500 million at some point because we do have that authorization too. Obviously, these are just estimations. No guarantee these sales targets will be hit, but they have it on paper, and that's their motivation. So that's what we'll be going off of. So now we're looking at the carbon capture tech. They didn't really say what we'll be making off that, but I say since we're paying a royalty to ESG to use this as exclusively in Canada, I looked at the trigger dates and I'm like, okay, maybe it's like 1% of the full royalty, right? So for year 2, which the trigger date already happened, so year 2 will be next year. The minimum payments for years ended 500,000. So a percent of that, 50 million. 50 million for that 1% fee. That's what I'm thinking. So when we go to year 5, right here, it's a 1.75 million. So I'm thinking 175 million in total for what they believe the revenue will generate for ESG and having that minimum royalty payment for exclusivity. So I'm banking on 175 million from them. And then the Ozone Tech, and so also the company manager believes that the trigger date could occur as early as first quarter 2025. There's no assurances. So the trigger date, we're thinking early this year, hopefully. And Ozone Tech is really going to come down to potential customers for ozone units. The technology is needed. It's 100% needed, but it's capital intensive. So we need investment. We need funds coming in to get these scaled up and scaled out. And so that event that we had, that customer event, was actually very cool and very important. And shout out to Rick on Twitter. He reached out to me. He's like, yo, look, if you look at the video, you can see there's some big timers involved. Veolia has a $22 billion market cap. They've been around, I think, since the 80s. They're based in Europe, but they're huge. And we also have the National Health Services Trust, which manages approximately 1,000 hospitals in the United Kingdom. So we have some potential customers, and it costs $1 million to $2.5 million per unit. And so for me, I was taking liberties and saying, okay, we could probably get a couple billion out of these big entities because they want these units. They can see the potential in them. So they'll have those upfront costs, and we'll see that, and then we'll get them out. And so this is the risk that comes into play. I'm adding this all together, remember. I'm adding this all together to get a valuation out of it. So again, our authorized is 500 million, but right now shares authorized is 236 million as of September 30th, 2024. And remember, for the preferred C shares, they accrue true-up shares. So Antilles, Kirkland, they still have to get their true-up shares even if they're not accruing anymore. And so we start off with 101 million true-up shares to start in March. They've knocked out over half of those, And at the end of the period in September 30th, 2024, we have a number remaining of true ups that is 43.5 million. Okay, so we're 43.5 million true up shares away from Kirkland being out of our hair, at least from a dilutive standpoint, share wise. James also has 20 million shares in Series A shares that are still to be converted at some point. And so if I added those all into what we have now, the 43 plus the 25, we would have outstanding balance shares of about 304 million shares. And so getting there as a hefty float, but with the potential this stock has, a 300 million share flow is still relatively small. But I am now starting to consider that, they might try to fill out the whole 500 million at some point. And so just a little bit of gematria. No true ups for Camber Energy Inc., 330 English ordinal. So 33. And I think that's powerful because the minute Camber Energy Inc. has no more true ups is the minute that it can finally move without anything large really holding it back. All right. Yeah, James still has his convertible shares. Yeah, he still has his warrants, but his warrants are at least at 1. And I doubt that since he has his warrants at 1, he's not going to convert his 25 million shares until a lot later down the line because he doesn't have to. He's going to get paid as soon as, CEIN starts doing what it's supposed to do. So as soon as the true ups are gone, we're really going to be cooking then. And I already talked about how, they added quite a bit of shares in this quarter. So now we want to go to the CEIN 2030 price valuation. And again, I would base it off the 2030 revenues. And, the power generation division already is generating 35 million and growing. And if it grows at 8% CAGR for the next 5 years, it was drawing approximately $51 million in revenue. I took the $500 million in revenue in 2030, took the 175 million carbon capture trigger date with the royalty percentage revenue. That's what I was thinking. And I took some liberties with the ozone, assuming hospitals buy units and the Veolia investment estimated, 1.5 billion. I think that can happen in 5 years. And so I came up about, 2.2 billion market cap for Camber Energy. Again, I'm basing that off future cash flows, growth opportunities, minus the risk. You get the company valuation. And for some gematria, I have CEIN, multi-billion-dollar company, 2030, 333 English ordinal. And so this is some of the math I have. 2.2 billion divided by 304 million shares equals approximately a $7.24 share price. That's if the shares stayed the same, stayed in that range with the true ups and James converting his shares. But realistically, if we take it to the authorized shares, 2.2 million divided by 500 million shares, it's going to be a $4.4 dollar stock price. So it might be something within the middle of $7 and $4, depending on where the outstanding shares, reside at that point. And, also my position, I have 100,000 shares of CEIN, and my share price right now is saying it's under 50 cents. So I have a 49 cent share price. So I'm under that 50 mark. So at $1, my money is doubled, which is great. You see that because I'm down $50,000. And so I'm okay though. I actually, out of all the companies I'm invested in, I really like the tailwinds and the tail opportunity on Camber Energy. Out of everything I'm invested in right now, and this is my largest position by a long shot. A long shot. I had over $50,000 in this company. And it was stupid at the time when I got in to have that much money, but I've stuck with it. I learned a lot. And, I became a better investor from trudging along in this struggle with this company. But I'm sitting here today with all the struggles, the reverse split, the delisting, and I'm still confident that the tailwinds, the propulsion, the growth opportunity, the future cash flows this company has, it's second to none. I mean, the broken grid tech is literally software. We could have literally like a tech multiple valuation on that division alone. It's software, right? Tech multiples, like technology company multiples, are crazy, you know? And so we could probably have that happy medium of being commodity based, utility based, tech based all in one. We're really cooking up something here. And I'm excited, but it's still a long road. We need that. We need that grid detection to really be something, though. We need to sell some units and we need them selling fast. They're confident, but having confidence and actually pulling through is one thing. Carbon capture, it's going to take a little bit longer. Again, that's another capital intensive thing. So hopefully we can get some good generation from that as well. But that's going to cost some money. It's cost some money. And the ozone, same thing. It's going to take a little bit to scale that out. So we need some funding from the big guys. But I think it's all possible, and I'm very excited. And so that's my price valuation for Camber Energy. I'm thinking somewhere between $7 and $4 in 2020, 2030. I think that's a conservative but realistic price for the company on 5 years out. So let me know what you think.